is Tencent responding to this new pressure, new commentary from the Chinese government?
Yeah, I mean, they've been pressured now for a while, whether it's an antitrust crackdown or gaming addiction that started back in 2018. They already had measures in place, but Emily, they're now pledging more further measures to rein in playtime for minors. We're talking about only 1 hour of gaming allowed for kids during the weekdays, 2 hours during the weekends and holidays, also perhaps banning those in-app purchases by kids under 12 years old, even floating the idea of completely banning gaming for children under 12 years old. But as I said, this is on top of measures that already came back in 2018, 2019, when they were in the crossfires of another clampdown by Beijing. Now, Beijing saying through the Economic Information Daily, which is a state-owned media, that, as you said, those very strong words, electronics, drugs, opium, saying that you cannot an industry should prosper by eradicating an entire generation. So Tencent, not surprising, this GTV chart showing that they're furthest from the 12-month target price on record. And of course, we saw other Chinese gaming stocks here in the U.S. plunging as well.
Meantime, this crackdown also taking a toll on Alibaba. We saw the company reporting results not too pretty. What do you see in there?
Yeah, and we were watching Alibaba so closely because it was one of the first companies that were actually hit by Chinese authorities cracking down on the tech sector. Their first quarter revenue actually missing Wall Street estimates for the first time in 2 years. Revenue climbing above $31 billion, but still coming in short of estimates. And net income did rebound from the previous quarter. But remember, the previous quarter, they had a loss because they were hit with that record $2.8 billion antitrust fine. So Alibaba has been underperforming peers. This GTV chart on the Bloomberg showing their underperformance since that Ant IPO was scrapped. Ant's profit also falling in the latest quarter to $2.1 billion. Alibaba's major divisions from cloud to e-commerce all showing the growth slowed. Still, interestingly, or perhaps because of the regulatory crackdown, CEO Daniel Zhang endorsing government policies, especially when it comes to the government calling out the blocking of rival services, because, of course, Alibaba and Tencent exclude each other's services from their platforms, but now he's calling this a positive trend.
Meantime, Shery, it feels like no sector is safe. Car chip makers are also under investigation. What's happening there?
Yeah, I mean, we heard from authorities that they're looking into price collusion, and we saw auto chip makers in China fall by the daily limit in Shanghai. And our Bloomberg columnist, Shery now saying that perhaps, just stay away from the hot money, where the hot money is going, because, of course, this was a sector that was surging given the global chip shortage ongoing for the past year. And it's been a similar story for Tencent. Despite all of these clampdowns, we continue to see liquidity, investment continuing to flow. We saw investments continuing to flow to education, property management sectors, and now they're really taking the heat from Beijing.